morning, everyone. Thank you for joining us today. We'll be talking about Canada's federal carbon pricing system with our program partner from Edison Energy. I have Mike Nigro here with me. Mike is our gas expert from Edison Energy. He's the manager of Gas Services Canada, and he'll be running through the presentation today for you. So any questions that you have, you can enter them into your screen, and we'll address them all at the end, just to keep the presentation flowing. But if anything comes to mind, just enter it into your screen, and then we can answer anything right at the end. I'm Eleanor Schneider, LAS Program Manager. And we have Fernanda Lazaro. She's our customer service rep, and she's helping us with the webinar on the technical side, and she'll be taking the questions as well at the end. So I'll pass it over to Mike, and we can start the webinar.
Thank you, Eleanor. Good morning, everyone. So the purpose of today's webinar is essentially to go over the new federal carbon pricing system that's come into effect for 2019. As many of you have probably been following news over the past several months, a big topic here in Canada. So we'd like to discuss with you, the members, some of the background as to kind of briefly where we've been, where we stand today with this topic, and where things seem to be heading, at least in the short term, and how this is ultimately going to be impacting the LAS members themselves. So agenda-wise, we'll be going over a little bit of background up until current day, go through the new elements of the federal carbon pricing system, one being the output-based pricing system for larger emitters, the federal fuel charge itself, or carbon tax, which many of you have probably heard in the news. We'll be discussing as well, too, specifically the impact to the LAS members. And then going over at the end a couple wildcards, a couple still unknowns that could influence the status of the federal program in the near future. So to give a little bit of background, since 2007, various provincial governments have been looking to implement forms of carbon pricing for large emitters and other carbon consumers. In order to reduce greenhouse gas emissions and basically reduce Canada's overall carbon footprint. In Ontario specifically, back in 2017, the province introduced the Ontario Climate Change Action Plan, which basically consisted of two parts, where we had a cap and trade based system, which was linked up with Quebec and California, basically designed towards larger industrial emitters of greenhouse gases, essentially putting a cap on greenhouse gas emissions for large emitters. The second portion of Ontario's plan back in 2017 was a provincial carbon tax, which many of you are probably familiar with. It roughly equated on the natural gas side to roughly 3.3 cents per cubic meter, and was billed to smaller end users who weren't participating in cap and trade. Now, fast forward to 2018 with the provincial election. One of the key items that was on the Conservatives' platform heading into that election was the idea of climate change and carbon tax. The Ontario Conservative government basically made it quite clear that they were opposed to the carbon tax, opposed to the cap and trade system as it stood. They did not find that they found it more of a financial burden than an effective means to combat greenhouse gas emissions. So lo and behold, Conservatives got into government last year, and one of the first orders was to scrap the cap and trade program itself, along with the carbon tax, and that basically came into effect for October 1st. So as of October 1st, smaller end users that were subject to that carbon tax of 3.3 cents per cubic meter saw it removed from their natural gas bills, and haven't been paying it since then. However, what's been going on since then in the background has been the federal carbon plan, which is what we're essentially discussing today. The federal government basically planned to impose its own backstop carbon tax system for provinces and territories that don't currently have their own adequate plan to manage greenhouse gas emissions. So now that Ontario has basically withdrawn the cap and trade and carbon tax that was previously in place, they would technically fall under that category and are now going to fall under the federal carbon management system itself. Again, it falls under there's two categories which fall under the new federal system. One being an output-based pricing system, or OBPS, which is similar to the way cap and trade operated, designed towards large emitters. And then there's also a federal fuel charge that will come into effect. And we'll get into a bit of the details there on each element and how they will impact the LAS members. What's also key to note is at the end of 2018, the Ontario Conservative government came out with their Made in Ontario Environment Plan, basically focusing on setting emission performance standards for industrial facilities and working with the private sector to develop clean technologies and reducing emissions. What's key to note here is that part of this plan that the Ontario government has come out with, there is no pricing element or no carbon tax element to it, which leads many analysts to think that it won't get approved by the federal government. Essentially, the federal government is looking for provinces that have their own standard or own program in place to manage emissions, to have some sort of a carbon tax or carbon price associated with it. So it is still pending federal approval, but most likely it won't fly. The other item there to note is, along with the province of Ontario, both the provinces of Saskatchewan and Manitoba have been outspoken and being opposed to the federal carbon plan as well. And there is currently an ongoing constitutional challenge against it within the courts. So time will tell to see how and if that has any impact at all. Now, getting into a bit of the specifics here regarding the new federal system, the first one that we talked about there was the output-based pricing system, or OBPS. And this basically came into effect January 1st. Like I had mentioned, it's designed more towards larger end users, larger industrial emitters. It's broken down into two categories where you have mandatory participants, so customers that emit over 50,000 tons of CO2 per year, and then you have voluntary participants that are over 10,000 tons of CO2 per year. So basically, under the system, similar to how cap and trade worked, is there is basically a threshold or an annual limit as to how many emissions, how much emissions a customer can produce on an annual basis. The only difference is that with cap and trade, it was more of an overarching limit, whereas with the output-based pricing system, it's more industry-based. It's segmented by various industries, and an average cap is determined based on that specific industry, whether it be food processing or metal refining or what have you. So that's the main difference. For customers that fall under this category, under the OBPS, basically they're exempt from the federal carbon tax itself, as they're basically, by participating, they're looking at a means of reducing their emissions. The only financial part that they're responsible for is if they exceed that cap limit on an annual basis. So then they would have to go out and purchase the necessary allowances in order to make them whole at the end of the day. Now, the proceeds from the OBPS will be reinvested into the province or territory of origin in order to help support carbon pollution reduction. And further details of how these funds are going to be distributed will be available, later on this year. Now, what's key to note here is this most likely will not be applicable to any of the LAS members. When we're talking about OBPS, when we're talking about cap and trade, we're talking about large industrial emitters at the end of the day. We're talking about single site locations, single meter locations as well too. We're not looking at aggregate amounts of emissions. So the municipalities, based on their business, would not fall under this category and would not be able to meet that minimum threshold of at least 10,000 tons of CO2 per year. Which brings us to what will most likely, or what will impact the LAS members going forward, the federal fuel charge or carbon tax, if you want to classify it that way. So this will come into effect as of April 1st, 2019. The fuel charge will assign a value to each ton of GHG emissions measured in carbon dioxide equivalent, and the beginning quantity will be $20 per ton of CO2. And will increase in $10 increments annually, reaching the ultimate goal of $50 per ton of CO2 in 2022. So significant increases are coming year over year if the plan does hold up over the next several years. For smaller emitters or smaller end users that aren't participating in the OBPS, the federal carbon tax would apply to fuel producers and distributors, who then pass on those charges to the end users. So your local utility at the end of the day, Enbridge, Union Gas, will be billing you directly, similar to the carbon tax in 2017, will be billing you directly for this. It will, however, the difference from the carbon tax of 2017 is this should actually appear as a separate line item on your end use bill, so it will be more visible. Rather than the old carbon tax, which was buried in your distribution charges. So again, what the federal government also announced later last year is that they intend to return a majority of the proceeds from the regulatory fuel charge directly to individuals and families within the province of origin in the form of these climate action incentive payments. So basically through household tax returns, I believe it is, you'll make the application to get this credit. It will increase incrementally on an annual basis as the carbon tax increases year over year. The government is also going to be providing relief in some form to residents of rural and remote communities, as well as certain groups or sectors such as farmers, fishers, and greenhouse operators as well too, whether it be some sort of incentive payment, or for ones that are large enough to participate in OBPS, lowering the cap threshold for what their emission limit has to be, or sorry, increasing their cap threshold as to how many greenhouse gas emissions they can have per year. Now, the biggest issue that we've seen with majority of our customers, and LAS members would fall under this category as well, is that the remainder of the fuel charge proceeds will be reserved to target funding programs to provide support to schools, hospitals, small, medium-sized businesses, colleges, universities, and municipalities, as well as Indigenous communities as well too. There still aren't a lot of details how and if the government is going to be providing any sort of relief or rebate to these groups. So that's been the number1 question that we've gotten from all of our customers is, can we expect to see some sort of a refund? For the time being, the answer is no, but it is still being discussed as to how this is going to pan out as far as rebating these types of sectors. So we're continuing to monitor this very closely, as there's still a lot more questions and answers at this point in time of dealing with this program. So we will continue to keep the members updated as we learn more as potential incentives or rebates that could be coming your way to help offset some of these charges in the near future. Now, the next slide here kind of puts together dollars and cents as to what customers can expect to see in some of the major fossil fuels, some of the cost implications from the federal fuel charge, namely the marketable natural gas, the impact that you can expect to see come April 1st on your end-use natural gas invoices, You'll see there on the top line, come April 1st, 2019, that $20 per ton equivalent works out to roughly 3.9 cents per cubic meter, and increases on an annual basis. And the scary part of this slide, obviously, is looking at April 2022, we're talking at just under 10 cents per cubic meter, which is almost roughly the equivalent as to where the actual molecule of gas itself is trading today in the open market. So you're talking about paying a carbon tax that's almost the value of your natural gas itself. So pretty scary things over the next several years from a budgeting perspective, from a financial perspective, and that's again why we're trying to get this message out to you, the members, to make sure that you plan accordingly in your budgets. The bottom table there just kind of outlines the year-over-year increase percentage-wise of the carbon tax. Again, significant bump up year-over-year. And then we also figured out an estimate of roughly how much that carbon tax will make of your total natural gas spend. So for the 2019-2020 year, you're looking at roughly 10%. But again, fast forward all the way to April 2022, you're looking at about 30% of your gas costs will just be the federal fuel charge. And again, this is a charge that, you know, we have no control over through the LAS natural gas program itself. It is what it is. It's a tax at the end of the day, and unfortunately, the way that things stand right now, we're stuck with it. So, but again, it's better for us to have this kind of view over the next few years and plan accordingly. And again, keep the members updated as we go, as we learn more information, as things change. Now, as I mentioned through the slide, you know, the impact to the LAS members, again, expect that this charge will show up on your end-use natural gas bill starting April 1st. It will appear as a separate line item, as I had mentioned, unlike the previous carbon tax, which was buried in the distribution charges, so there will be more visibility on the actual charge itself. Now, as I mentioned, while the details are still limited at this time as to how the government plans to reimburse small businesses, municipalities, schools, and other sectors, either through rebates or incentive programs, the message that we're trying to get across to all of our customers is factor this into your budget. Make sure that you're accounting for this additional cost in your budget, as will have a significant impact on it. Again, starting at 3.9 cents per cubic meter, effective April 1st. Now, to kind of wrap up here, there are a few wild cards that could influence the way the federal carbon tax, or the way the federal carbon plan actually pans out over the next several years. The biggest item is we're in an election year. So come this October, we could have a new government in place. And then one of the main focuses, and we saw this in the provincial election last year, and the same goes for the federal election, one of the main focuses will be on climate change and will be on the federal carbon tax. The Conservatives are opposed to the Liberal carbon pricing plan. So it will be interesting to see come October what type of a government we have, and what a lot of our on the procurement side don't factor on it either being a milder winter or a colder winter. There's just so much uncertainty surrounding the weather. And I say the exact same thing about politics at the end of the day. Don't put all your chips into politics, and don't be dead set that we'll have a new government come in play come October. So again, we need to plan at least for the worst case scenario, that things stay its course and we continue with the current plan that's been imposed by the Liberal government. The other wild card as it stands right now is the Ontario carbon plan as well too. We had mentioned at the beginning that the focus right now is on regulating large emitters without imposing a carbon tax. The plan is still under review as it was just released towards the end of last year, and it needs approval from the federal government if it is going to be kind of an alternative to the federal plan. But as I had mentioned through the presentation, that most likely a lot of analysts believe that this isn't going to fly unless there is some sort of a carbon pricing element that is worked into it. The last wild card that we had also mentioned on is the challenge of the federal carbon tax. You know, the Ontario government has been very vocal that they are opposed of the Liberal plan, the current plan as it stands right now, and have vowed to challenge it in court. They've even budgeted to spend upwards of $30 million to fight it in court. So how much of a case they actually have, them with the Saskatchewan government as well as the Manitoba government, it'll be interesting to see how that plays out. But again, can't put all of our stock into that actually being a viable solution to kind of defeating the current plan as it is. So better again to plan for kind of the worst case scenario as it lies. So with that concludes basically the main part of our presentation here. Again, the message that we want to get through to the members here is just make sure that with this new charge that's coming into play, make sure that you adjust your budgets accordingly, that you're planning accordingly, and obviously through the LAS program, through our work, through Edison Energy's work with LAS, we'll continue to keep program members updated as we progress through 2019, as with the implementation of this new program, this new pricing, and some of, again, the wild cards mentioned there that will be, you know, panning out through 2019. There's going to be more information to come, and we'll be making sure to keep members updated regularly as new information becomes available. The contact information there for your main contacts here at LAS is available if you do have any further questions. I think at this time we'll take a few minutes to review some questions that came up here, and we'll hopefully give some answers.
Okay, so we have two similar questions, wondering whether the presentations will be available. Can you email them or?
Yes, they will. So just to add to that, the presentations will be emailed to all the participants, as well as anyone who is registered, but we are also recording the presentation right now, so it will be available to participants as well if you want to rewatch the presentation.
Okay, and anonymous question. I've heard something about an exemption certificate for distributors. Do you know anything about this and how to register for it? Thank you.
An exemption for a distributor, I guess. Distributors how? I guess I'm not sure. Distributors.
Just a certificate for distributors.
I mean, in the case right now with the federal carbon tax as it applies right now, I mean, the distributor as it stands in the eyes of the LAS member will be your local utility, will be the Enbridge or Union Gas. So they are not exempt from this. They have to pass on the charges to their end use customers. So to either households or businesses, anybody that's basically on their distribution network. Exemption certificates are available for people for basically anybody that falls under that OBPS category. So your larger end emitters that are participating in that cap and trade style program. So again, if you're unsure, if you have some more specifics on either, you know, emissions for a specific site or if they would or if a site would qualify, I would recommend sending that information over to either Eleanor or Fernanda, and we would coordinate with them to get you more information.
Yeah. Note from Alan Selby. Note that the individual carbon tax rebates are being handled through the 2018 personal tax return. Yes. If you pick a tax package now at your post offices, you will find a new Schedule 14 that gives the details and is to be attached to your 2018 tax return. Also, you will see the schedule online if you do your taxes online.
Excellent. Yes. Yes. Good, good information there. Okay. Thank you very much. Yes. As I mentioned, it'll be applying for your rebates on a household and individual level will be on your tax return this year. So.
Okay. And Vidal Guerrero, is onus on large emitters to determine whether part of OBPS or would is onus on large emitters to determine whether part of OBPS, or would notification be provided assuming they achieve reporting thresholds?
I mean, if you are reporting right now to the government any emissions that you are or any emissions that your site has, then odds are you would probably fall under the OBPS category. So I mean, if you do on a site level do have some sort of a reporting element, then odds are you might fall under that. If anything, I think if there is an LAS member out there that would fall under the OBPS category, it would most likely be under the voluntary participant. Now, what's key to note from this is we've seen a lot, because it's very segmented by industry or by sector, we've run into a lot of complications with some of our customers that fall under the voluntary category applying for it, that they don't necessarily have an industry that's established yet. That they would fall under. That what I should have mentioned as well too during the presentation is the OBPS standards right now are currently under review, even though they're technically in play as of January 1st. A revision is currently being reviewed, so that way anybody whose industry isn't captured under the first go round has an attempt to reach out to the Ministry of the Environment and get their in and make a case for them to get added to the program as well too. Okay. I hope that answered the question there. So.
Well, Vidal had another question attached to that. So to confirm, would the OBPS not apply to any municipality-owned facility or operations, even if comparable facilities owned and operated by private sector entity would in theory fall under the program?
Again, it would depend on the size of the facility, and it would depend on the emissions that are being reported. That's what it boils down to at the end of the day. So, I mean, typically the threshold that we've seen for customers, like from a natural gas I'm just speaking from a natural gas perspective, the emissions that we've seen as kind of the equivalent for natural gas, you're looking roughly around maybe 800 to 1,000 gigajoules a day of usage there, which is pretty significant, especially for the LAS members. Again, we're not looking at aggregate volumes, we're looking at single site, single meter facilities. So, but again, if you have any specifics, we can take it offline after the call, provide specific information to us, and we can help walk you through. And again, we've been in regular contact with the ministry as well too with these questions. You know, and again, I apologize if things are very vague here, but the past few months there have been more questions than answers dealing with this program. There's been a lot of headaches to say the least. So we're working through it for all of our customers as we go right now.
Question from Todd Boyd: is RNG exempt from the tax?
That is a good question, and I will take that away. I do not have the answer for that right now, so let me take that away, and I can provide that information to Eleanor and them to circulate to the members. Okay.
And Tyler Hunt: will electricity rates be subject to the tax? Ontario uses approximately 30% natural gas for grid generation.
I believe it will be factored into the prices of electricity. It won't appear at, and again, I apologize because I have our back office that's been handling a lot of the operational work. But I believe it's not going to appear as a straight carbon tax like the natural gas itself. It'll be more buried in the actual cost of the supply, if anything.
And message from Chun Liang. Please clarify what is meant by marketable natural gas as referred by one of the slides.
So that just means basically your natural gas supply. So the gas that you're purchasing through either the LAS program or for members that are purchasing gas from directly from the utility, either Enbridge or Union Gas. So it's the gas that you're using directly at your end use facility.
It's for the questions so far.
Okay.
Okay.
So I just want to thank Mike for taking the time to come to our office today and present the material, and thank all the participants for joining us today. Again, if anyone has any questions, you can certainly email us, and we can follow up with that. We do have a couple of takeaways to take away or to follow up on. One of them was the RNG exempt, if it's exempt from the tax. That was a question from Todd. So Mike will follow up on that, and then we'll let the participants know the answer to that one. And again, thank you to Fernanda for managing us through this webinar. We all worked through this technically very well. And again, thanks a lot, everyone, and have a great day. And as always, if you have any questions, please feel free to contact us. Have a good day.